This channel is for educational purposes only. Make sure you do your own due diligence before making any investments. And there is inherent risk in trading, so it's speculative. Just make sure you keep that in mind.
Hi, this is Joe Rabil with Invest Like a Pro. I want to talk about a specific trade setup that was very attractive that took place recently. I'm going to use two time frames, weekly and daily, and I want to explain why there's a specific thing that I've talked about in my book and several times in numerous videos over the course of the last year, a certain aspect about what needs to take place on the lower time frame before or where I believe you're getting into a really attractive potential setup. So it's a key part of my strategy. And I just want to give a little bit more detail as to why it's so important to me. So let's go ahead and get into the example. And this is ZUO tech stock. And I'm going to start. So I've got a weekly chart on the left and a daily chart on the right. And I want to just start here by looking at what's taken place on the weekly chart. So we can see that the pattern was lower lows and lower highs, a lot of erratic price action, very volatile, some big moves along the way. And now we're starting to see a switch in character or price structure where instead of making lower lows and lower highs, now all of a sudden we're starting to make higher lows and higher highs. And I mean, one of the things you can do is you could look at the look at this 18 and just follow its path because it's sort of smoothing out the price action. And if we do that, we can see what's sort of taking place. So we're making lower lows and lower highs, and then here we actually made a higher low here versus this bottom, and then this was a peak and we came back up through here. So obviously the price action is going to make it a little quicker, but the 18 is going to give you a kind of a smooth version of what's taking place in terms of the price structure. So if you have the zigzag up, you're going to kind of see the same thing using the price action, but the 18 again gives sort of a smooth version of what we're trying to look for, which is what is the structure, what's taking place, lower lows and lower highs, or now what's taking place is higher highs and higher lows. So if we go ahead and look at what this moving average is doing, now it's rising and so is the 40. In fact, if you looked at the 40 alone, you can see that it was declining and now it's rising. So through this whole period, we don't have enough history for it to go all the way back. So, through this, basically all this history, it was declining and now it's rising. So that's sort of another way to look at it from a trend standpoint. But looking at the 18 and the 40 and recognizing that they're rising now, where basically all throughout this period, you didn't have that situation. There wasn't one time during all this time here where the 18 and the 40 were rising together. So we've reached that state. So that's sort of stage one. Stage two is, we had a big negative reading here based on the sellers, that red spike. But look at what took place on the buy side. And we got a big green. So I call this a green peak because it's based on the buyers. The buyers were very, very strong here. And so by the fact that we see price structure improving and momentum signs improving, the strength of the buyers improving, we want to be looking for this pullback here. So we know we've got rising moving averages and we've pulled back into this key zone. So that's kind of our starting point. Now, what I wanted to really talk about was the lower time frame. And we know on the higher time frame we have a setup that is sort of attractive as this is pulling down. But we want to look at this lower time frame to, again, there's several reasons why I don't just buy off the weekly and I want to go down to the daily chart. Number one, I want to improve my timing. If I just bought the moment this came down towards the 18 on the weekly chart, I'd have to wait a month. And the fact is, you don't know that it's going to turn. The reality is this is dropping down. You just don't know if it's going to hold or not. No matter how good it looks going in, there are a lot of times where stock will be set up and look like it's going to go up, and then it just keeps dropping down. So we want to wait for some sign on what I call a trigger. And if we wait for the trigger on the weekly time frame, it tends to be on the later side most times. And so what I want to do is I want to go and dissect the lower time frame and see if I can improve my timing and lower my risk. Those are the two key things that I'm looking to do. So, so part of it, so the key thing that I have mentioned over and over again is I'm looking for the 18 to cross down below the 40, and I want the opposing trend. So, just to put this in simpler terms, on the higher time frame, I want an uptrend. I want the moving averages going up, and on the lower time frame, I want the moving averages. They don't necessarily have to be dropping, but I want the 18 below the 40. So a lot of times it'll look like this. The 40 will be like this, and the 18 will drop down below it like that. So I want some combination of a counter trend. This trend is going down, and this trend is going up. So that's really what we're trying to do. Higher time frame, lower time frame. And so when we start from that vantage point, we can then start to say, okay, I now have the 18 below the 40 here. So what am I looking for? What I've said over and over again is that I'm looking for this to come into the zone and come out. Why do I want that to happen? What am I looking for? What's the point of that? So in most cases, when you do that and you actually come up through and into the zone, you will be breaking the downtrend line. You'll have a downtrend line in place, and by coming into the zone and crossing above the 18 and coming inside the zone between the 18 and the 40, you're breaking the downtrend line, and then subsequently you're coming down to test, so that's the 2. So you're doing two things at once. You're doing the 1, 2, 3 change in trend. Again, this is out of my book, but it is really, out there in terms of the way a stock changes its trend. You break the trend line, you test the low, and then you come back up through the prior high. That is a 1, 2, 3 change in trend. So what I'm pointing out here is that most times when you come into the zone, you're breaking the downtrend line. Now, if you notice in this case, that didn't happen. But what did happen, I think, is still just as important. So we went into the zone and then we came out. And let me clear this out. So on this bar down, look at how strong a down bar we had. And remember, the 18 just crossed down below the 40 on this time frame. So if you're thinking about it, you have a moving average crossover to the downside on this time frame. And that means that if you're thinking about it, then this time frame is sort of turning to the downside. And the question is, are we getting a true sell signal? Is this a sell signal that's going to cause this to keep trending to the downside? And what ends up happening is it comes down and tests this low. And not only that, it is testing this support zone. Because if you notice, we made a bottom here and a bottom here, and then we undercut that. So what happened is we came down and we undercut a prior low, and then we spiked. So this is basically two of the patterns I look for at once. It's a undercut and rally, and it's also a spike and a ledge, which formed after. This is the ledge. So that means you spike down and then you rally back up and then you go sideways for a period. And then when you come back up through the upper end of resistance, and you could really say it's probably a little bit lower, then you're starting to the upside. So what the move inside the zone and outside the zone does, a lot of times it'll create the 1, 2, 3 change in trend, but other times it'll create this sequence of spike pattern and then a ledge forming, or an undercut and rally pattern. And either one, you're looking for strength coming out of here. So I just thought this was key because I wanted you to understand why I talk about coming into the zone and then coming out. I think if you understand why this is taking place, then you're on the lookout for these key levels and these undercut patterns and these spike and ledge patterns and the 1, 2, 3 change in trend. If any of those three are taking place, it's building your case for getting long as this is getting ready to move higher. You know, so let's look at the entry suggestions here. So you have this down move, you test the low, and then you turn around. When MACD crosses back up, that is where this bar is coming back up through the 18. Now, we've already moved into the zone and out of the zone and tested support here. So I'd be okay with using this entry. This is an aggressive entry, but this is still a good entry with MACD crossing up and confirming the cross of the 18 after you have a test of the low. Your second option is when this crosses up through the 3 up here. So you'd be getting in up on this spot right here. Intraday. If this happens during the day, you go ahead and get long. Spot 3 would be the close here above the 40 right there. So those are your 3 signals, I would say. And then the fourth would actually be normally later, where you wait for the first pullback. This was not that long of a pullback, but normally you'd want to see some kind of a pullback here and then get long there. Those are your 4 options essentially on this trade. This is 1, and then 2 is the finishing of 3. And then the third would be crossing back above and closing back above the 40. And then 4 would be the first pullback after all this completes. So those are all your options. It's a personal preference. There is no right or wrong way of doing it. It's all up to you. I tend to favor the close of the 40. I used to love getting in here and found that I got whipped around a little bit too much. I just like to wait for a little bit more confirmation, especially because I know just how strong this is. I don't want to get whipped around. I'd rather just wait for confirmation, put my stop down here, and then take a target up at this high, you know, somewhere in this zone, take one target here. So if I buy, you know, 1,000 shares, I'm probably taking 250 shares and booking a profit at this level, going to a break even, or at least tightening the stop in some way, shape, or form, and then seeing if I can turn this into a big win. Because as I noted back here, this is a huge turnaround. And if we come up through this resistance level right here, we're probably starting a much bigger trend to the upside. And I want to play along with that if it's going to happen. But I always take a profit here, book my profits, and reduce my risk so that I take kind of my risk out of the equation and then go for a bigger win. And I think this is professional trading. This is how you want to go about looking at things. Look at the higher time frame first. Go down and look for your setup on the lower time frame and look for a good trigger. All right. Hit that like button, and we'll talk to you next time.